The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
At Big Iron Auctions, customer satisfaction is our #1 goal. As the 40-year leader in auctions for agriculture, real estate, livestock, construction, and transportation, we are here to serve you. Big Iron will handle everything from start to finish. From meeting with you, to prepping your equipment, writing the listings, and collecting buyer's payments, let us do the heavy lifting for you. We love our customers, and we treat them like family. There's a Big Iron sales rep in your area, so let's get together. To learn more, visit bigiron.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Marks of Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida, and he's nice enough to come on and talk about what's happening in the world of commodities. Shawn, how you doing this morning?
Never been better. Never been more excited about the U.S. economy for 2025. Big year coming up. Profitability ahead if you keep your heads to the ground.
I think you're right, because there's there's about 4 things we talked about this morning that are pointing towards that direction. But before we get to those 4 things, let's do a little quick rundown here. What's happening in the Gulf of Mexico? So we've got this tropical storm, now hurricane, predicted to be a Category 4, Category 5 to hit in that basically the Panhandle of Florida, which doesn't really happen very often, but especially of this magnitude. You got a cotton crop where 65% of the bolls are open and you're looking at seeing if it's a category 4 or 5 hurricane, feet of rain and not just inches of rain on top of that. So you're going to have a huge issue with the cotton crop. So I guess, Shawn, give us a rundown of what you're seeing right now with this hurricane that's coming, and your, I guess, feel of where the cotton market's going to end up.
Well, the cotton market turned up last week on this worry over this potential. We've talked about the Median-Julian oscillation on the show before, which is the area of tropical convection around the Earth, and it moves around periodically. And right now it's moving into phase 1 and 2. The only thing you need to know is phase 1 and 2 means the convection moves over, it moves into the Western Hemisphere, and it's really, really vibrant for developing increased hurricane activity, especially in the Gulf of Mexico. This won't be the last one we're going to get. I expect at least one more major one, and possibly 2 more major ones between now and mid-October before we end the season. So we had a strong start, a lull in the middle, and we're going to have a strong finish. Most of it's been in the Gulf, which is what we've been talking about all along. The key to watch on this storm, it's going to hit probably Thursday night. It's going to be the anywhere from Tallahassee to Tampa, direct hit. How strong it is, there's a loop current in the Eastern Gulf that is driven by these currents that go in from the Caribbean. The Caribbean is near, very, very warm because of the 40-year increase in sea surface temperatures. How long the storm sits in that loop current will determine how quickly it expands. There is a lot of wind shear. So how strong is that wind shear? And, in the last 5 years, what the trend has been is that the loop current wins out more than does the wind shear. So the conventional models are suggesting category 2-3. It would surprise me that if we have something that's more like 3-4. I know some are calling for a 5. I think that's a stretch. I think 3-4 is more the right move. Either way, it's a serious, serious storm. And if you look at the trajectory going right into the southeast, into Georgia, into South North Carolina, into the deep south in Louisiana, and into Alabama. I mean, this is like 40-45% of the cotton crop is grown in this area. No harvesting at all. All the bolls are 65% wide open. And there's at least one more storm coming that I don't know where it'll be right now, but cotton's in trouble. We talked about this early in the year that this would be a big issue to watch, and it's happening. And the cotton crop's already been under tremendous pressure from weather all season long. The USDA keeps downgrading it. The ending stocks keep coming down. And then we see overnight that China is shot the bazooka off with dramatic reductions in interest rates, dramatic increases in money printing, doing all kinds of things to pump the economy. And we've talked about before, cotton is a cyclically sensitive commodity especially to China and what they're doing. And obviously we've lowered interest rates by 0.5%. We're going to do more. This is all very positive for increasing cotton demand for 2025. So, if I'm a physical buyer of cotton, I want to be making sure I get myself buttoned up here, because it looks to me like the risks to the upside are increasing.
Yep. They have, you talked about this early on, like when we were talking about, the hurricane season coming in clear back in like May and June. You said, hey, this year is going to be an active Gulf thing, and right out of the gate, coming up through Texas, we had that very early, very powerful hurricane coming through there. So got that one right, Shawn. As we take a look through what's going on there, let's talk a little bit about what's going on in China, because I think that's a big thing that we should pay attention to. China has been limping their economy along, doing some various stimulation of their economy through, quantitative easing and different stuff like that. And last night they came out and said, this is going to happen. We're going to get after it and make it and hem this thing up. Huge move there, going to boost the economy quite a bit, which means that there's going to be more demand for hopefully U.S. Agricultural products, I guess, Shawn. So as you kind of war game this a little bit, what are your thoughts and how do you see this working out?
I have a strong working theory, can't verify 100%, that when Janet Yellen took 2 trips over to China, certainly she was trying to go on vacation, of course, but my view was that she was not going on vacation. She went over there. The Chinese were basically telling her that they had to devalue the yuan in order to stimulate the Chinese economy. And of course, we don't want them to do that. I think that all the central banks got into the room. the European Central Bank, the Japanese Central Bank, Chinese Central Bank, and of course our Federal Reserve. And they got in a room and says, we need to let China shoot the bazooka without them devaluing against everybody else. And so what first thing that happened is the yen took off. We had the yen carry trade unwind. A couple of really ugly periods of unwinding and markets in disarray. That was the first step of the stool. Then dollar starts caving in as the Fed says we're going to lower rates, and they just didn't lower rates. They lowered rates by 0.5%. It's the only time I think it's the only time they've ever lowered by 0.5% without a clear and present danger in the United States. So they're telling you we're lowering rates, we're going to print money. So the dollar came under tremendous pressure. Then the Fed, and then the China shoots the bazooka off. And you know what? They're not devaluing because we devalued ahead of time so that they could do this and keep the interest rate mechanism and the currency mechanism in a relatively stable state to that's conducive to the United States not wanting to lose a competitive advantage with China, and China looking at their economy, and they don't want to devalue either. They want to be the next superpower, and they want to actually be a role. They know devaluing your dollar is not really going to be helpful to driving capital into the country. So they devised this plan. If you think of like the Plaza Accord of 1985, this happens where you get a manipulation of currencies for a bigger purpose that everybody agrees to. I'm convinced that that's what started here, and this is going to be the game plan for 2025. Dollar coming under continued pressure, and China coming under greater chances to do more bazookas, because you got to get them back online with the economy. You can't have the second largest economy in the world in an abject depression. You got to get them going again. You got to help them out. As much as many people hate them, and maybe we hate them, and they don't like us, we do need to work together, because it's without them doing well, we don't do so well. And, I'm not trying to be political here, but it's in our best interest to not see them completely fall into the ocean and die. We don't want them to do that. And so I think this is Janet Yellen devised this plan, and it's underway, and it's very supportive to commodities overall, and especially undervalued grain commodities.
Okay. All right. So as you look at some of the, as you look at some of the things that are out there right now, if you look at where hogs are, obviously that's going to be a big thing. But you also look at other things like soybeans, which there's a lot of crops still just in bins, right? I mean, there's not like, most of 23's crops still in the bin. You got 24 stuff going through the bin. No one's really selling stuff right now. Shawn, as you look at this, what are you looking at, and what are you telling your customers right now when you say, hey, when you look at corn price, when you look at soybean price, you look at hogs, those kind of things, what are some of the catalysts that you're looking for along the way to say, hey, we're going to get back in the game here?
Well, we've talked about this. We want to talk about this in great detail, but the Brazil situation is going from bad to worse. We talked about October 15th being a very important line on the map, and that the closer we got to it, we would get compression of effect, and we'd start to see the soy market breaking out this week.
Right.
Coffee breaking up this week, sugar breaking out over the past week. These are all very sensitive right now in Brazil, and I do not see a major weather pattern change to this drought. 105-degree temperatures across major growing areas. I don't really see it changing much through the end of October, and it's going to be too late to turn on the planting window for soybeans, meaning they're going to be perpetually late. They're not going to get all the acres they want. The yields are going to be compromised like they were last year. And the second crop corn is going to be delayed, and those acres are going to be down, and that crop's going to be unfavorable. So we're going to have two back-to-back years of poor crops. We already are seeing that they're running out of soybeans to sell, which is a surprise. Everyone thought they would be selling a lot more for a lot later, which means we're the only game in town. We've been seeing very sizable purchases of U.S. soybeans from China on a regular basis. I think the export demand for soybeans are going to be considerably higher. What we're also seeing is it's very early, but the first 5 or 10% of harvest that's coming out on soybeans in the combines, it's not meeting the mark. It's coming up short. It's not catastrophe. I don't want anyone to say like, oh, but we had like best ever yield ever, and it's just not, it's not delivering. Corn yields, the soybean yield's too high, and the USDA is going to have to come down. So you throw better demand from China, you throw the U.S. corn, U.S. soybean yields too high, coming down, and you have the worst start to the soybean growing season in history in Brazil. Yeah, there's a lot of reasons to be very optimistic that we're going to get a very good opportunity to make some cash sales as we go into the fourth quarter here. And so, my view is you get two chances to sell your crop in every given year. We had a chance in May, which we made that recommendation, and we think we're going to get a second opportunity in the fourth quarter. And if you look at those two prices, if you sold at those two levels, you're a very profitable farmer in the United States. And I think the ag economy is going to be much, much better than everybody's been forecasting in the direness that they were at during when we made those August lows for those reasons. Corn's a little bit more of a second half growing season story, meaning we can't really get weather going for corn in the first half. But if soybeans start taking off, corn's going to follow. And then, of course, Russia-Ukraine is off to one of the worst starts since 2010-11 crop year. We don't see any change in that going into the end of October. Planting acres are going to be way down. Yield, we're going to have terrible stands, terrible growth going to dormancy, and the prospect for a second back crop for them back to back is highly probable. And so the wheat market's starting to react as well. And so you get soybeans a week going, corn's going to follow. Corn will have its day to play weather starting in January, February, when we start planting that crop and we start projecting what we're going to be looking at there. So I look at all of this, Casey, and my gosh, just and then we have geopolitics on steroids going into our U.S. elections and post-U.S. elections. I can't predict what's going to happen, if it's going to happen, when it's going to happen, but there could be at any moment a geopolitical trigger that could set the wheat market off, especially at any moment in time, which would then, of course, help the corn market. So overall, how anyone is not optimistic about grain prices right now is beyond me. At least the way we're looking at things. Maybe we're dead wrong, but that's how we see it.
Okay. So is some of the action we saw yesterday in the grain markets where we saw, corn close up 11 3/4, and we saw beans close up 27 1/4. Is that some of this fuel that we're seeing from what you're talking about?
Absolutely. I mean, soybeans are really going to be the driver here on weather. I mean, the weather's really, Brazil weather's all about soybeans right now. The wheat's all about Russia-Ukraine weather right now. The corn right now doesn't have a weather story, it's just going to follow. I mean, that's just where we're at. Demand for corn has been insatiable, by the way. So right now we got incredible demand for corn because nobody else has any. Because Brazil had a terrible corn crop, Russia-Ukraine had a terrible corn crop. China always needs to buy corn. So
right. So on the cattle side, as you look at where the cattle market's been, and we've seen some really high prices, they've kind of hung out. People predicted that during this interest rate downturn and stuff like that, we were going to see a contraction of the cattle market. We've seen some, but nothing that really knocked it off the rails that much. As you're looking at where the price of corn is right now, and that's really kind of some of the driving factor there. You got cheap corn to feed. As you're looking at this, Shawn, how do you think this is going to play into what we see happening in the cattle market?
Well, if we start getting the feed prices up, start getting the corn price up, it's going to help the feeder cattle market rise again. One of the bearish parts of the feeder cattle markets, we've had this decline in corn prices, which historically reduces the demand for feeders. One of the other factors that's been bearish recently is that we've been importing a record amount of feeders in from Canada, and that has been allowing us to have greater placements than many would have thought, increasing the supply than we thought. When you look at the numbers up there, however, it doesn't look like that's a sustainable feature, and that if we're not able to continue those blistering imports of feeders into placements down here, then we're going to tighten this cattle market up again in 25 pretty considerably. Lower interest rates here. The Chinese put the bazooka on cattle, beef, highly cyclical it's a good sign that demand might come back, Casey. Maybe not necessarily in the fourth quarter, but into 25, we could see some much better demand coming in as animals that are available contract again. So while we've had a kind of a pause and a correctionary period here, and a lot of disappointment by many who thought that we would be taking off to new all-time highs right now, I think that is maybe better set up for 2025 once we get through this indigestion period in the remaining part of 2024. Hogs, pork price keeps taking off in China. They have a supply shortage post-African swine fever, and I think we're going to sell a lot of pork to the Chinese in 2025. And if we do that, then the hog price in the U.S. is going to do very, very well. I think that's really simply what it's all about.
Okay. All right, so I've got to ask you this. This is not the one time I ask you this question about this time every year. It's sugar beet harvest time here, and guys I've been talking to, tons are there, and the sugar that they're seeing right now is typically the sugar they would see at the end of the season, not at the beginning of the season. So that means there's going to be even more sugar content towards as harvest goes on. With the situation we've seen in Brazil and in the sugarcane areas down there where it's really hot and really dry, and you look at this hurricane situation coming through Florida, how much more upside do you see to the sugar market right now?
If it still stays dry through October, I mean, it's just going to continue to ratchet up. I mean, remember, Brazil dominates sugar. And right now, India still has an export ban on sugar. So the only game in town is a little Thailand exporter for sugar, and they'll have some. But, I mean, you can't do without Brazil. And every week that goes by that they're not getting rainfall and they have 100-degree plus temps, their chance for a decent crop dwindled by the week. And if they're offline, then it's hard to imagine that current prices are factoring all of that in, meaning that unless India ended their export ban and said, we're going to just unload all these sugar exports onto the market, and it doesn't look like they're going to do that. It actually looks like they're going to use some of this excess sugar that might be building up to make more ethanol domestically. That's what they're putting out to the world, that they're going to keep the export ban and produce more ethanol domestically for their energy needs. It's hard to imagine that the sugar market has ended its factoring it all in, meaning that the rise that we've seen from 18 cents to 23 cents, I don't think that's likely fully pricing it in. It's priced some of it in, but not all of it, especially if we're dry and hot through the end of October or longer. They're going to have to probably put some more weather premium on that market.
Yeah. Well, all right, Shawn, good stuff as usual. Folks want to reach out to you and get more information about what you're doing at Hackett Financial. What's the best way to do that?
Our Twitter page is at Fairdex11. From time to time, we put stuff on there about our thoughts. We have a website, Hackett, Hackett, advisors.com. We also have some on our front page that are some of our interviews and things that we do. We're not habitual social media guys. We actually work for our customers and try to give them the right information. But from time to time, we will give some insight into our statistics, cycles, and correlations about how we see things and how we're looking at the future price for agriculture.
Right on. Shawn, appreciate you being on the podcast.
Thanks, Casey. Love doing it.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram, or X. I got to quit saying Twitter. At Moving Iron LLC. Go to LinkedIn, Moving Iron Podcast. Go to the video version of this over on the YouTube channel, which is the Moving Iron Podcast YouTube channel, and you can check out everything Moving Iron related at movingironllc.com. So with that, I'm Casey Seymour with Shawn Hackett. Let's go smart, folks. Out. Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century.